Good morning. Welcome to Stock Market Today and happy Friday. It's November 15th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today where you can sign up for a free email that gives you daily stock ideas to consider in your inbox every trading day before the market opened. So U.S. equities were little changed in Thursday's trading, but finished near the best levels of the day. Treasuries saw gains across the curve, sending yields lower, and the dollar was weaker on the major crosses. Gold finished up 70 basis points, as did crude. WTI crude was down a like amount, down 70 basis points after reversing earlier gains. At the sector level, it was REITs and materials that outperformed on the day, while energy and consumer staples lagged. And as we get to the desk this morning, futures are pointing to a higher open, up about 30 basis points to start the day. European stocks are higher after a mixed session in Asia overnight. Treasuries are weaker across the curve after 3 days of gains. The dollar is weaker versus the euro, but better on the yen cross. Gold down 50 basis points after gaining for 2 days. And oil is down 20 basis points to get us going on a Friday morning. So if we should look at the structure of the S&P 500, for all intents and purposes, it's been a pretty boring week. All right, we did have a new closing high for the S&P 500 yesterday, but the churn up here continues. Just a lot of churning activity after breaking and reaching these all-time highs. We do still have key support at the 200-day moving average down below. Call it 29.05. Near-term support at the breakout level, as far as I'm concerned, that's 30.30. And then below that, 29.50. The indicators that we are looking at are in line with the price strength that we've seen. The RSI remains in bullish ranges and continues to knock on the door of overbought levels. I would actually love to see an overbought level here as a kind of a stronger momentum confirmation to the price strength that we've seen, but not likely to get that with the churning that we've seen over the past week. Chaikin money flow is bullish and is working its way higher. We had that brief dip that we were keeping our eye on, and now we've worked that off and are moving higher. So Chaikin money flow is a sign of accumulation or distribution in the marketplace. So we're certainly seeing accumulation even as the market churns at all-time highs. Continue to stay the course here. I think you want to continue to focus on the leading areas of the market right now. At the sector level, it's cyclical rotation that's really playing out over the past 6 months. Tech, industrials, materials, and financials are the leading 4 sectors of the market. I think that's good hunting ground for long ideas. Let's talk about our market in a minute. What are we writing about today in the note to Chaikin Analytics clients? Well, the SPY continues to churn near all-time highs. We hit on that. On Fridays, we look at key themes and relationships in the marketplace, and one of the most important ones for us continues to advance. That's semiconductors on a relative basis continue to advance from the breakout level. We do see more room to run in the growth to value shift that's been playing out for the past couple of months. Regional banks are pulling back to support, and I think that creates an opportunity. And as we said, futures point to a higher open here today. All right, looking at the major sectors, major industries, and indices now from a power bar perspective, the Dow relatively flat yesterday. 3 bulls to 6 bears there, so still skewed in favor of the bears for the Dow Jones Industrial Average. But remember, that's only 30 stocks. Let's look at the broader indexes. S&P 500 tax on 14 basis points to close at a new high yesterday, 123 bulls to 92 bears. The NASDAQ was lower on the day, 31 bulls to 19 bears there. Small caps, call them an flat, 687, 320. Bulls to bears. Bonds had a rally on the day, up over 1%, sending yields lower. We've actually seen a little bit of a drop in yields over the past couple of days, but the bonds are weaker here this morning, as we said. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major markets across the board, however, are mixed. Let's take a look at our stock of the day now. Stock of the day today is TSC, Tri-State Capital Holdings. Tri-State Capital Holdings has a very bullish Chaikin Power Gauge rating due to very attractive financial metrics, very strong earnings performance, and very strong price volume activity. The experts are middle of the road here, but the 20 factors, 5 in each of these 4 categories, give us our very bullish rating. Stock is in a strong trend above the rising long-term trend line. It's in a strong industry group. You've heard us talk about banks for a couple of weeks now. Now, we started to get excited about the banks, but a lot of the stocks were overbought. Now we're starting to see stocks enter oversold conditions. So I think that sets up opportunities in some of the banks. Taking a look at Tri-State here, we can see recent outperformance meeting that very bullish rating. Stock has become oversold with bullish shake and money flow. Actually triggered one of our money flow buy signals today. I actually think that Tri-State is an interesting name to take a look at on the long side of the portfolio. I'm featuring it in my note today to Chaikin Analytics clients. I think it makes a lot of sense to start digging in, right? We've been talking about the financials flashing relative strength. We've been talking about the fact that the banks have come on as rates have started to lift. I think you want to start looking at some of the banks, both large and regional. We're going to take a look at a regional bank chart in a little bit as for potential ideas. But TSC, Tri-State Capital Holdings, is a name that I'm looking at today as a potential bullish idea. I think you should be looking at it as well. Let's take a look at the sector tracker now. Movement of the major sectors over the last 5 days. We tied, past couple of days, yields have fallen. That's helped the bond proxies a bit. Real estate has moved to the top of the list over the past 5 days. Tech and healthcare round out the top 3 slots, and that is encouraging. Utilities also being helped by that decline in yields, now positive over the past 5 days. Staples, materials, and comms are middle of the road. And we're starting to see energy move back to the bottom of the list. Remember, we've been talking about energy here, and we've seen some near-term price strength, but the fundamentals haven't been there. It's still too early for me to get excited about what's happening in the energy complex, and we're going to take a look at equipment services in just a moment. Financials have a little bit of profit taking in the near term as rates have come in, and discretionary has been an area of the market that's been under some pressure of late. Now, remember that discretionary in its purest sense, if we look at it on a cap weighted basis, is very heavily weighted to Amazon, which has been under pressure. Amazon is close to 25% of the consumer discretionary index. So weakness in Amazon certainly weighing on the discretionary stocks, but we're keeping an eye on the sector rotation. And, the 5-day trends are interesting to look at for potential near-term shifts, but we take a look at the bigger picture trends, and the bigger picture trends continue to favor this cyclical rotation coinciding with the growth to value shift, which we will get to a little bit later in the show. Now, our industry in focus, as I said, oil and gas equipment services, and it has been nothing short of a disaster over the past 6 months, underperforming the S&P 500 by 34%. And the power bar ratio, which measures future potential, is very weak. 24 bearish stocks for 1 bullish stocks. It is the worst. Ranked 21 of 21 subsectors that we look at. And this is what we're talking about when we say we just can't get excited about the fundamentals around the energy complex just yet. Some of the indicative names with very bearish ratings within this group: Drillquip, DRQ, Noble, NE, and Core Labs, CLB, all with very bearish Chaikin power gauge ratings. And if we look at the ETF itself, the ETF lines up with what we're seeing in those key stocks. XES, the ticker symbol here, ETF power gauge rating is bearish. You can see a clear downtrend. Now, the trend is actually marked strong because it's above our trend line, but the trend line is declining. So let's take away the evidence approach here and come to the conclusion that this is still something we do not want to touch. Why? Well, that very bearish rating is met with intense underperformance relative to the SPY or the broader market, and that underperformance has been in place for over a year. At the same time, despite this trend lower, right, getting nearly cut in half over the past year, group is still under distribution, right? Bearish Chaikin money flow readings. Overbought, oversold indicator getting out of an overbought condition, kind of middle of the road, no real tell there. But can't get excited about this group, right? There's other areas of the market where we want to go looking for long ideas. In fact, for those who trade to the bearish side, I think you want to use rallies in energy stocks to look for opportunities to open to the bearish side of the portfolio. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. DXC, some follow through following their earnings announcement, up 3.5% yesterday. NetApp, NTAP, bullish stock, up 3% following their earnings report yesterday. No real news on Mosaic, was up 3%. Still a bearish stock here at Chaikin Analytics. HPQ and Xerox, remember these two are contemplating a merger, and HPQ, Hewlett Packard, up over 3%. Xerox up 2.9%. That is on the heels of Carl Icahn disclosing a fairly large stake in Hewlett Packard and coming out in support of a deal of a merger between Hewlett Packard and Xerox. So that got those two stocks running to the upside yesterday. On the loser side of the board, Cisco. Cisco's earnings and guidance were a disappointment. That led to some weakness in the networking stock. Cisco down 3.73% yesterday. Kraft Heinz, KHC, caught a downgrade to sell at Goldman Sachs yesterday. That took nearly 6% out of the stock. CMT has had a plethora of downgrades over the past few days, with 2 more on board today. And that's coming a few days after their recent earnings announcement. CMP down 5% yesterday on a downgrade. And I'll note 2 more downgrades here today. Regeneron, some political commentary around drug pricing weighing on Regeneron. There was a note out from a large sell-side shop highlighting which companies could be at most risk from this political commentary should it take place. And they named Regeneron as being at risk. And finally, Mohawk was down 2.64% yesterday. Nothing company specific to drive the weakness in that name on the day. Let's look at the charts now. Here's the one we know well. Here's the one we watch closely. SMH relative to the SPY, the Van Eck Vector Semiconductor ETF relative to the S&P 500, right? Holding after breaking above a 2-year resistance line. Remember why this is important. There's a positive correlation between the direction of this line, i.e. semiconductor relative performance, and the broader market. When semis are outperforming the market, that tends to be a positive for the broader market. And it tends to take place with a lead, right? Semis broke out of this consolidation ahead of the market. The market quickly followed suit. To the extent that semiconductors continue to outperform the market, we think that that's bullish for the market in general. And we do think that there's scope for further outperformance because look at momentum. The momentum of the ratio, the RSI of this ratio has shifted into bullish ranges where it holds. Notice on the pullbacks, it doesn't get much below the 50 mark. That's bullish ranges. That is a bullish momentum confirmation to the price strength that we're seeing in this ratio. Add to that the ratio is above a rising 200-day moving average, and you get further confirmation of an uptrend in the relative performance of semiconductors against the S&P 500. And if we look at semis on an absolute basis, you see a nice steady uptrend off the late 2018 lows. Semis trading near all-time highs, and I would expect to see some strength in the semiconductors today as Applied Materials came out with earnings and guidance that were better than expected. That should boost the group here today. What about that growth to value shift? Now, we've been talking about it, and we think there's room to run here. Right, we're looking at the Russell 3000 growth relative to Russell 3000 value, and growth has been outperforming value really since late 2017. Nice steady uptrend, nice rising 200-day moving average. But now look at what has taken place since mid to late October. The growth stocks are underperforming value. You've seen this chart before with support lines. I took them out today, but the support lines have all been broken. The ratio is below the 200-day moving average. And notice that the 200-day moving average has now shifted from rising to flat. So the long-term trend is changing here with near-term price weakness. So what does that mean? That means when we were looking for ideas, for a long time, we always were telling clients skew to the growth names as opposed to the value names. I think you kind of want to flip that. It's at best, it's a more neutral view now. With maybe a little bit of favor towards value names because look, I mean, support is much lower for this ratio, right? We could still see, 2.5% of underperformance of growth by value, and that's confirmed by momentum. Look at the RSI of the ratio. After putting in a negative divergence at this high, right? The RSI made a lower high when price made a higher high back in August. The ratio has now become oversold 3 different times and can't get much above the 50 level. So contrast that with the semiconductors that are holding above 50, bullish momentum. This ratio now has bearish momentum, indicating that downside is likely to continue. Finally, regional banks pull back towards support. We've been talking a lot about the financials. Check out the regional bank ETF, the iShares US regional bank ETF, a nice breakout through resistance that should now become support. The fund is above a rising 200-day moving average, and it has a very bullish Chaikin Power Gauge ETF rating. Take a look at the power bar here. 27 bullish stocks for only 1 bearish stocks, and the RSI is putting in a series of higher lows as it shifts to bullish ranges. And on a relative basis, we can see a break of the downtrend line and beginning to work higher relative to the S&P 500. So that's, we looked at Tri-State earlier, one of the smaller banks. We think the regional banks present a compelling opportunity here, especially if they hold this breakout level. That's going to wrap it up for today. I hope you all have a great weekend. Here's the website to sign up for the email. Thanks for spending your morning with me. I will see you on Monday.